In this video, I will do the technical analysis of Dow Jones Industrial Average Index for the week commencing from January 24, 2022. This technical analysis will be in two parts. First, I will do it on the weekly chart and then I will do it on the daily chart. So this way, we will be able to get the most accurate results here. So I will begin this technical analysis with the weekly chart. Okay, guys. So this is the weekly chart. Okay. Uh, Now, first let me write down the support and resistance levels here, okay, and then we will do the technical analysis. So the support and resistance levels, okay, um, we have this, hold on, we have this resistance, okay, this critical resistance here at 37,150, okay, 37,150, and then we have another resistance at 36,650, 36,650, another resistance at 36,110, 36,110, and the importance of this 36,110, okay, I have described many times in my previous technical analysis. Then comes 35,700, then comes 35,700. Thereafter another resistance at 35,430, 35,430, then 35,120, 120, then 34,785, 34,785, okay, and then immediate resistance at 34,535, 34,535, then the next resistance at 34,310, 34,310, then comes the support at 34,050, 34,050, and then the final support at 33,590 or 33,585, 33,585. So these are the support and resistances for Dow Jones Industrial Average Index. Okay. So let's do the technical analysis here. Before that, first the interpretation of this candle. It's a heavy bearish candle, a very heavy bearish candle, which clearly means that there are bearish sentiments in the market. Okay. And this does not mean that the market is going to come down. Okay, there are bearish sentiments, but it is not necessarily means this does not mean that market is going to come down. Okay, so this thing will be more clear on the daily charts, whether it is coming down or whether it is going to retrace. Okay, now comes the technical analysis. So first comes the Bollinger Band. If you look into the Bollinger Band, this is the lower band, this is the median of the Bollinger Band. Market has closed between the lower band and the median of the Bollinger Band, which means market is bearish. Then comes the moving averages. Market has closed below all of these moving averages, okay, which means market is bearish. But there is still a fan out in the in these moving averages. There is still very clearly fan out in the moving averages. So that means that there are still some bull or bullish sentiments in the market. So until and unless you see two consecutive candles closing below these moving averages, or there is a crossover of any of these moving averages, okay, we cannot say market is bearish. Okay, so as of now you cannot say market is bearish, but yes, there are bearish sentiments. No crossover, and means there is only one candle. There must be a second candle closing below these moving averages, then only we will say the market is bearish. Okay, then comes the Ichimoku. Market has closed above Ichimoku. Okay, this is the Ichimoku. It has closed above Ichimoku, which means the market is clearly bullish through Ichimoku. Okay, now comes other technical indicators. If you see MACD, it is clearly bearish. Okay, clearly bearish because MACD is less than signal. Okay, and there is some good divergence here. Then comes the stock RSI. Stock RSI is clearly bearish. Okay, MACD, stock RSI both are bearish. Then comes the divergence. Divergence is normal and momentum is also momentum is almost dead. Okay, which means through all of the technical indicators except the Ichimoku, okay, market is clearly bearish. And yes, you should not forget the role of the moving averages. Okay, like I told you. So through Ichimoku, market is bullish and partially through moving averages. Otherwise, market is clearly bearish. Okay, on the weekly chart. See, this is the weekly chart. Weekly chart means one candle means 1 week, not 1 hour or 1 day. Okay. Now, in order to see what exactly is going to happen on Monday, Tuesday, Wednesday, okay, like on day wise, so we are moving on to the daily chart to see okay how the market is going to behave or how the market is going to react next week. Okay, guys, so we are here on the daily chart. This is the daily chart, right? Let me write it down here. This, sorry, here, there, somewhere around here. This is the daily chart. Okay, now daily chart means one candle represents 1 day. One candle means 1 day. Okay, not 1 week or so. Now, first, let me write down. No, I have given you the support and resistance earlier. So okay, so let's do the technical analysis first. Okay, and then we will deduce the movement of the market. So first comes the Bollinger Band, lower band of the Bollinger Band, median of the Bollinger Band, which means the market is clearly bearish. Okay. Then comes the moving averages, a crossover, clearly a crossover. Okay. And then clearly a fan out in the moving averages. Okay. Which means market is clearly bearish. Then comes the Ichimoku, market has closed this 3 times, okay, below Ichimoku, which means market is clearly bearish. Now some other technical indicators. We have MACD. Okay, MACD is heavily bearish, but the problem with MACD is that the divergence is very high. Okay, see the MACD is -228 and the signal is 12. So divergence is extremely high, and this divergence will help the market to retrace. Okay, this is very heavy, this divergence in the market. So market is expected to retrace in order to cover this divergence. Then comes the stock RSI. Stock RSI is absolute bearish, absolute bearish. Okay, 0 0. Okay. Now comes the divergence. So divergence is normal, not a problem. Momentum, okay, momentum is, yes, momentum is 80 and momentum is supporting the bears. So through all of the technical indicators on the daily chart, it is clear that market is clearly bearish, clearly bearish. Okay, let me mention some of the important these support and resistances. So the most important one is here. Okay, it is at 34,050. This one is at 34,050. Then we have 34,310. Okay, market is around that support. Then the immediate resistance is at 34,535. It is at 34,535 immediate resistance. Okay. Then another one at 34,787. Okay, but I'm not 34. Okay, yes. So 34,787. It is also important. So 34,785 you can say. Then the next one is 35,120. 35,120. Then the other one is at 35,430. 35,430. Then we move up and here 35,700. Okay, now the importance of this 35,700, okay, I have described many times earlier. Okay, this is the most important here, supported resistance. As of now, it is acting as resistance, but earlier it was acting as support. Okay. Now, thereafter 36,110 again, the importance of 36,110, it is very, very important, supporter resistance. So I've also described the importance of 36,110. Okay. Now, see, Dow Jones, okay, it has already overshoot three of the technicals. Okay, three technicals, which means that there are very, very heavy chances it is going to retrace on Monday. So let me write it down that on Monday it is going to retrace. Okay, on Monday there is a rebound in the market. Okay, sorry. So on Monday, there is a rebound expected in the market, and this rebound is because of, because over Dow Jones it overshoot three of the important technicals. One more thing that see here, there is one technical that I am not going to disclose here. It has happened in February 2020. Okay, and before February 2020, the same thing happened in July or June, July 2017 or 2018. Okay, the same thing has happened yesterday here. So in last 5 years, this is the third time. This is the third time, and whenever it hit that particular technical, there is a strong rebound. Strong rebound. Whenever we see a rebound, okay, particularly on Monday, and whenever we see a very heavy bull candle on Monday, okay, then the same sentiments are carried over to the next day, which means the Tuesday. So if you see that there is, means see, we need to see that how heavy the candle will be, okay, on Monday. So if you see that there is a very heavy candle and that has engulfed this one or two candles, which means that on Tuesday you can further expect this candle to move up. Means sorry, the market to move up, and thereafter only it can come down. But otherwise, it is going to move up. So it is going to recover what is lost in the previous week. Now comes fine. So this is the only thing that is going to happen. Okay, so you can expect a rebound, and whenever you see a rebound, okay, further rebound, and then only the market will come down. Okay, so rebound and then come down. So my advice is that if you see market is struggling in any of the points, particularly I am thinking about this particular level, that is 35,700. Okay, so I am expecting market to reach or to hit this particular level 35,700. Okay, and if it fails to hit this level, then for sure it is going to hit this level. Okay, when you see a rebound, the rebound will hit 35,120. Okay, at least 35,120 at least. Okay, otherwise it will hit 35,700. Okay, so whenever you see, okay, that market that there is a rebound, and then if Dow struggles, okay, 1 or 2 days on a particular level, okay, around a particular price, in that case you can expect that the Dow to come down. Okay, other than that sorry other than that, there are no chances Dow is coming down. And one more thing, like I told you, in the first week of January, that this year 2022 is the year of bubble. Okay, which means see, there is a bubble in the market, and this bubble has to burst. So the bubble will burst for sure, it will burst. But whenever bubble bursts, that does not mean that market will always fall, means the market will always fall and every day it will fall. No. Okay, it doesn't work like that. Market works in a way, means even if it has to fall, it will fall, and then it will retrace, then it will fall, then it will retrace. So this is how it works. Simple as that. Okay, So as of now, this is what is expected to happen in the market. So guys, I have given the link to my Google spreadsheet regarding this the Discord group, okay, in the description of the video, so you can take a look. And also I have given the link to my this profit strategist programs, options trading profit strategist programs, so you can also join the program. So guys, this was my technical analysis for Dow Jones Industrial Average Index for the week commencing from January 24th, 2022.